And good afternoon. Welcome into a Tuesday, December 8th, 2020 edition of Market Talk. I am your host, Jesse Allen. Great to have you here. Find us online, markettalkag.com, Facebook, Twitter, Instagram. It is all at Market Talk Ag. Find us on all your favorite podcast sources, including Apple Podcasts, Spotify, TuneIn, iHeartRadio, Google Podcasts, and so many more. Also via our radio affiliates on their websites, including WIBW in Topeka, Kansas, KGNC in Amarillo, Texas, KIAI in Mason City, Iowa, and KWAT in Watertown, South Dakota. Well, a pretty rough day in the markets. It looks like a lot of red across this commodity and livestock board today. And let's dive in and get the latest on it. He is with agmarket.net. Jim McCormick is our guest today here on Market Talk. Jim, how are you?
Good. Thank you for having me on, even though it was a kind of a bearish day.
Yeah, it was a pretty bearish day, Jim, and I want to just dive in immediately and talk about this. It seems like soybeans kind of led this complex lower. South American weather looking less threatening. That's not good for us. Some of these short-term trading windows seem to be kind of fading, although we're shipping and crushing at a good clip. But we've kind of headed down towards that next resistance level of 1141. We kind of broke past that 20-day average of 1166 on soybeans today. So let's start there. What is going on with this bean market and the soy complex, and what does this mean for producers moving forward?
Well, I think near term, Jesse, what we're seeing is just kind of a little bit of tiredness in the market. We've had a couple surges. We tried to get through 12 a couple times. It failed. Now we're coming into the big crop report on Thursday. Traditionally, the government doesn't make any big adjustments on this report. Now, the average trade guess is about a 20 million revision, and our group believes the crop will get, that ending stock number will get smaller, but more likely in the January report, not on this December report. So you get a little bit of question there, but let's also remember it's been one phenomenal run from the bottom to the top. We've had about a $4 move from the August low to the near-term highs. To see a pullback of 50, 75 cents to $1 in overall big bull markets isn't out of the question. It is the end of the month, the end of the quarter, end of the year. Let's face it, there's a lot of tax liabilities for the bulls that have made a lot of money. So I think some money's coming off the table just as a way to kind of position even up as we wrap up the end of the year. I think in the long run, though, you got a stock skew, Jesse, right now at about 4%.
Mm-hmm.
That's the tightest ever. If you lower this carryout down to about 140 million, which I think is where it's going to be closer to when it's all said and done, you'd be looking at the tightest stocks to use ever, down below 3%. And then I think your tightest overall carryout's about 92 million. When we had those prices, or stocks used at those levels, we've seen $15, $16 beans. So I think the bulls are going to kind of keep that in their back pocket. Is until we know South America's crop, it's hard to get too overly bearish, but a correction could continue at least near term.
Yeah, I think the one positive to this situation is that I know quite a few producers. I know not everybody, but quite a few producers who have sold a lot of beans already. They've made their sales. They put a floor underneath them, but there are still a few of those guys and gals out there who have beans sitting in the bin, and they're probably looking at this market wondering, okay, as the potential run out, what do I need to do? Should I just sit on my beans, hoping that we get some of those changes that you mentioned with stocks to use? I think that's a question that a few folks are probably asking themselves right now.
Well, right now, I'd say if you have the beans, it kind of depends on where you're at and your risk tolerance. If you've sold 80, 85, 90% of your beans, you might be down to those risk bushels where you're going to say, hey, I'm willing to let it ride. Now, if you've got those bushels, producers, I think you got to be minimally prepared to see this maybe go as low as $11. The long-term trend line crosses around 11.20. Maybe 11 is psychological number. So are you willing to risk 50, 60 cents? If not, the lack of carry in the market and the strong basis, you might just go ahead and move it and then re-own it like a July vertical call spread where you can keep ownership into the summertime, but cut that risk to a fixed risk if you're uncomfortable carrying too much risk at this point in time.
Jim, let's go over to corn. And I think corn was maybe just pulled a little bit lower today thanks to beans, but that trade range just remaining kind of flat, kind of range bound. Ethanol margins, they're continuing to be kind of crimped on some weaker demand. Daily exports were quiet today, but basis remains strong. It seems like there's support in this corn market. And I've heard from a lot of folks who are still, pretty optimistic, pretty bullish with this corn market right now.
I know I'm a little bit friendly corn right now. The corn market seems to have stalled near term. We do have this big report. The exports, we're not getting the big headline sales, but we are selling the corn. The fact of the matter is China's still the big wild card, Jesse. The government has them at 19 or 13 million metric tons of corn shipped to them, or imports this year. The FSA's got them at 19. The private people say it's closer to 30. I lean to think that private estimates toward 30 may be correct just based on the pricing we've seen. They sold a lot of corn this summer at all-time high prices. So I think the demand will eventually be there. That'll drop this corn carryout closer to 1.5. It's just like the beans. It's going to take a little bit of time. I do also think we're got an acreage battle coming in for the first time in multiple years. The carryouts, where they are for beans and corn, which ones the producer's going to want to plant, it's going to make an interesting spring. So I think overall you got to be a little bit optimistic corn in the long run.
Well, and we got to think about this too. $4.20 corn, 4.25 corn, a lot better than 3.25, 3.30 corn where we were at, and not the not too distant past. So I mean, I think we have to look at this and go, we made a nice run, and the fact that we're holding these levels at least here in the near term is a positive.
Well, I think it is, and one thing I also want to bring up, you're bringing up the crush, the ethanol industry. We're kind of in an interesting situation in the ethanol right now. The demand for ethanol is definitely slowing up, Jesse, because of the unfortunate pandemic expanding.
Mm-hmm.
But one thing interesting about this is because of the price of Milo, it's gone through the roof. Any who's listening is kind of in that southwest portion of the country, Kansas, Oklahoma, they realize the cash market has exploded. So what we've interested found is those ethanol plants there that normally feed off of the Milo are now switching over to corn. So our corn, even though we're not going to be producing as much ethanol, we're actually going to be using more corn than we would expect because those plants have now switched over to corn, which means we could see an additional 75 to 80 million bushels of corn being used for ethanol that you normally wouldn't count on. So the ethanol industry, I think overall, is still going to be doing pretty good when it's all said and done.
I definitely would agree with that, and we hope that's the case. On the wheat side of things, you mentioned folks, Kansas, Oklahoma, that way. Looking out into the plain states, wheat continues to struggle here. Those export tenders, they continue to go to the Black Sea origins for the most part. Conditions really not changing. This is just a kind of a quiet market right now, and it kind of just seems to keep struggling with each passing day. What are your thoughts on the wheat market right now?
I think you put it best. It's struggling right now, and we are kind of dead. We're not really competitive price-wise. Corn and the beans, I think, are going to be the leader near term. If they do go up, they will pull the wheat up. But, for the most part, our wheat's gone into dormancy now. Now we're going to wait for demand and then see what happens as everything comes out. The Russian crop, some of our biggest competition, went under horrible conditions. 25, 30, 35% of the crop is rated poor to very poor. I think that opens the door for us for demand down the line. The other thing is the dollar. It continues to weaken, Jesse, and as that dollar weakens, it's going to make us more competitive. So I do think the wheat market might have a story to tell as we go into 2021. But right now, I'd say it's sideways to lower is probably the near-term movement of the wheat market, unfortunately.
And if I'm a wheat producer, I think I just got to be sitting out there maybe hoping for a Christmas miracle at this point, and maybe, like you mentioned, get this thing turned around heading into next year, Jim.
Now, the one thing also I think we are watching that, it's kind of moved out because of the time of year, but the drought monitor. It is continuing to build and build and build. Now, we were just talking to a weather forecaster who was saying, asking him about this. He said the way he looks at winter droughts, he said a good spring rains can turn this around, or it could be the beginning of something like we saw in 2012, where we started dry in the fall of 2011 and it just built through the summer. He said we'll know a lot more as we get into that April-May timeframe, and that's kind of how this wheat crop's going to look. If we stay warm and dry and we have a bad spring, this wheat crop's probably going to explode higher. If we have good weather, we bring this wheat crop out, it's going to probably lag a little bit. So the wheat market, it's just going to be more of a sideways chop. For producers, I'd say, look, don't get too afraid to market some profitably, and then kind of like the grain market, re-own it with options in case this weather really takes a turn for the worse. But the stocks to use so tight in the corn and the beans, it could be an interesting spring.
Definitely could be an interesting spring. Jim, I want to flip over to livestock here today. We saw box beef prices sharply lower again today. We're seeing pork demand. It's kind of just, it's less than ideal right now. But we did see some higher trade, and we saw a little bit of strength move back into this market here that kind of rallied things today, especially across the cattle side, even though we closed a little bit lower. And that had to be at least a good morale boost here to end the trading day today.
Well, that's it. Right now, the cattle market per se, and even I think the hog market, we're kind of I believe we're more of a kind of a sideways tug of war mentally. This is the time of year we see a lot of demand. The people go out to eat. You got the holiday spending, and just we're not going to have it. We're locked down. Chicago's locked down. California's locked down. We're trying to get this pandemic under control, and I think that's going to limit. That's why the box beef is going down. The demand that people are hopeful to see just isn't materializing. But you got to be optimistic in the long run. They started giving shots in Britain. We got more news today about the Pfizer vaccine that showed it had very, very few side effects. It was very effective in inoculating people. And I think that, if you look at the numbers, what they're telling us is we get that second, third, fourth quarter, I think you're going to see phenomenal demand as people go out and spend money. Credit card debt's actually going down for a lot of people because no one's spending money. People aren't traveling. People aren't driving to work. So I think you're going to see some of the best pin-up demand we've seen as people go out to eat, go to that steakhouse, have those parties, entertain as we get in the latter half of 2021. And I think we're setting ourselves up for an exciting beef market when it's all said and done. We just got to get through the near term, 3 to 6 months, unfortunately.
Yeah, and I think I would agree with you there. And the fact that, the last couple of months we've seemed to hold this, in live cattle, this 110 range. I know we sold some cattle 108 today in Kansas and Texas. I mean, we've been able to, despite the COVID concerns and the lack of demand, we've held this range. And I mean, if producers, I feel like if they can handle this range for a little while and get to the point where you're mentioning, I think we will have a chance for some profitability here.
I agree. Like I said, I think you got to be optimistic. We've thrown some pretty negative stuff at the market, the pandemic, the hospitalization, and we're holding this range. Just as you said, I lean, eventually you break out of the range. Like I said, in the long run, I'm bullish. I think it will break out to the upside just because like I said, I think the demand, there's just a lot of pin-up demand. It's just when's it going to show? I saw one estimate said that they thought, by June, we pretty much have 70% of the people either unfortunately infected or inoculated, and that you're at that quote unquote herd immunity at that time. Mm-hmm. And I think you just gonna, that'll be a perfect time to go into summertime demand. And I think you could see that counter seasonal type of excitement.
On the hog side of things, this is a market that I think a lot of people have been a little bearish on lately. And we did see a little bit of a rally, a little bit of a pop in that market today. December options are getting ready to come off the board, but you look out, February hogs 65 higher today, 65.60. April hogs 69.22. Taking a look at this hog market, I know it's kind of the same story as beef. The demand side's not really there. China's a factor in that, but what is your thoughts near term with this hog market? Is there any room for profitability if I'm a producer right now?
Right now, I think it's like the beef. We're going to struggle a little bit. We've gone down near support. We kind of held and bounced off of it. I would hope for kind of a near-term bounce here and there. I mean, but the reality is we got to get demand right now for the hog market to really get it excited, I believe. So I think it's just like the beef market. I just think, the consumers just aren't spending the money right now on that type of they're hunkering down right now, kind of like we were in the springtime. But like it's just like the beef producer. I think the longer we go into it, I think it's the demand's going to be there. The one thing I am a little bit concerned about is there's a lot of articles. China has kind of gone through this massive change where their pork industry was very small producers and very few big producers, Jesse. Now it's gone the other way around. This pandemic has knocked the small people out, and they're rebuilding with these massive units, which is going to keep the competition harder for us in the long run as these, if they're able to rebuild that herd. But on the other side of the equation, with these huge buildings they're building, if there is an outbreak, it's going to be devastating. So it's going to be an interesting situation for the Chinese. Near term, though, you get to the Chinese New Year's, we get into January, February, that should be optimistic and maybe get this hog market to rally as we go into 2021. China has done a better job controlling the pandemic. They're a little bit more open in their movement of their economy, and that hopefully be a good sign where we sell some pork to them here as we get into next year.
Yeah, it'll be interesting to see. You mentioned those quote unquote hog hotels, as they're calling them over there in China. And it could be a recipe for success for the Chinese, or it could be a disaster. It just depends.
I think Reuters was showing they were like 6-7 story tall buildings that, I mean, you're going to produce over 1 million hogs in some of these facilities. It's hard to fathom, to be quite honest, how big they are.
I would agree. Jim, you mentioned the US dollar and the weakening dollar there. We haven't really touched on that, but I know that that's going to affect a lot of trade overall, just period. What are your thoughts with this US dollar? Is it going to continue its skid? Is it something that we might see slow down here in the near term? What are your thoughts there?
I think it's going to continue to weaken, to be quite honest. I think, part of it is we're fighting the pandemic and some of the other countries doing a little bit better. But more importantly, I think it's just the overall policy we've got. We've been printing money left and right to try to jumpstart this economy. That's got this market under a little bit of weakness. And, the reality is you hate to root against the US dollar as a consumer of dollar. Like if you want to go on vacation, a weak dollar is not what you want to see if you plan on going on vacation overseas once this pandemic's over. But as a producer, Jesse, and producers out there, the weaker the dollar, the better the deal is for the world to sell. And that's really what we need. A weaker dollar makes it more competitive to sell beans compared to South America, sell hogs to the Chinese. And I would look for the trend of the dollar is weaker, and I think that's going to continue. And I think that will be bullish. And like I said, the policy of printing money, I think that kind of gives us a little bit of inflationary push as well, which should be bearish dollar and bullish commodities as well.
Jim, any other final thoughts you have for us today?
Right now, I guess what we're looking at this point in time is, in general, I got to tell you, I'm a little bit friendly to this old crop grain, and I think people ought to, be optimistic with this scenario we're setting up. But the big picture is, remember what we've been in, folks. It's been one heck of a ride this year. Early in this year, it was very profitable. We saw the corn market crash down, the bean market crash in the pandemic. Now we're back to profitability levels that I don't think anybody would have ever dreamt would have been possible 60, 90, 120 days ago. Don't be afraid to lock in some of those profits, producers, and then look to use the board to re-own it when it's all said and done. You can always come back in and do something with options. But more importantly, as we get into 2021, don't be afraid to start locking in profits for next year's crop. Because, we're looking at level corn, near 420, 415, beans trading near the 1050 level. Those are profitable levels. So come up with a game hedge plan right now to start thinking about what you want to do with next year's crop.
Jim, if producers want to reach out to you and the team at agmarket.net to get a little help with that marketing and risk strategy plan, what's the best way to do that?
They can reach our team at 844-424-6758, or they can go to the website at agmarket.net.
Very easy, very simple. Jim McCormick with agmarket.net. Thank you for joining us on this Tuesday here at Market Talk. And that is our Tuesday, December 8th edition of Market Talk. Again, find us online, markettalkag.com, Facebook, Twitter, Instagram, and all the ways you can listen to us on demand. You can find them all on the website at markettalkag.com on the web. This has been the Tuesday edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.